Great deal. Big smile on your face.
Yeah.
Talk us through the rationale and the timing.
Well, firstly, excuse my voice. I think I've been talking so much for the last few days, I nearly lost it last night, which would have been a challenge with investors today. The rationale is this is sort of the next step in our journey. I mean, it's got implications for the wealth management business, first and foremost. There's been a convergence of technology across all platforms. And this gives us, access to both the workplace, the direct, as well as our core financial advisory, which is unchanged. It's just added to. And then for Morgan Stanley, it just gives us more ballast. It's a capital-light business. It's part of the journey.
We're going to dive into all of those different factors strategically. I want to start on the timing, though, if I may. I asked you specifically about a potential acquisition for E-Trade in December 13th. You were kind of sitting on the fence a bit, actually, now I look back at it. David Faber just saying he thought the conversations only started this month. When did they start?
Well, in truth, they started in 2002.
Wow.
Before you were born.
Just about.
Just about. I called them back then when I was at Merrill because I was very intrigued by the fact that there were always going to be segments of clients who only wanted to deal electronically and digitally. And the people who wanted financial advice also wanted digital access. So it was always a buy versus build. Then I called them again, and we had pretty extensive negotiations in 2007. And in the end, we couldn't get past their HELOC portfolio, which proved to be a problem. So these discussions reinitiated in December. Okay. So about the time we were talking, I might have had a little twinkle in my eye.
There we go. Well, I think you did. I should have pushed harder back then. But anyway, and in terms of getting it over the line, your stock, it's an all-stock deal. Your stock's up sharply since then. Did that give you the currency, essentially, to get the deal done?
Not really. We had the confidence. I mean, our stock was beaten down in the summer, which I thought, and, I get people joke at me for defending our stock, but I kind of think it's my job. And I'm a large individual shareholder. It was ridiculous. We were trading below book value in the summer. I mean, we'd just produced $8 billion of revenue and a 11% ROE. So the stock was being beaten down for reasons that were wrong, I felt. No, this was a longer-term thing, but certainly gives you more confidence when your currency is strong.
Mm-hmm. In terms of the share price move today, it's down about 4%. It was very dilutive, stock issuance. Did you expect it to be down more? Are you pleased with only down 4%?
I totally expect it to be down at the open. I don't know where it'll finish today, a week, a month. It'll bounce back from that. We're still trading above what we were before we started the earnings call in January, and we own E-Trade. So it's kind of like this is not a bad outcome at all. We're up, as you said, 40% from the summer. Listen, it was dilutive on tangible book. It was accretive on ROTCE. And it will be accretive to earnings within 3 years. So I'm very comfortable with where the numbers are, and I think the stock will trade just fine over the next several weeks.
Was one of the factors about timing also to make sure somebody else didn't buy this asset? Goldman Sachs, in fact, trading down 2% this morning. A win for you? Is it a direct blow for them?
Well, I'm not going to comment on Goldman, but I think when I think about strategy and big strategic moves, you've got to have a clear strategic vision. And I never worry about strategy from envy. I'm never trying to copy what somebody else is doing. We've got to do what's right for Morgan Stanley. When you get that done, you've got to be very opportunistic. You've got to move and move quickly. So we put in, obviously, a very full, I think appropriately, bid for a great, great company with an iconic brand. If we'd messed around with that and tried to do this on the cheap, that would have created all sorts of turmoil. So when you make your mind up, you be aggressive to get the job done, and that's what we did.
Was the primary driver, were you most attracted to the corporate stock program that they have?
It's a great program, and we're in that business. So, and they've done, frankly, a really good job in converting clients who come through that business. That's one. The secondary was just the sheer technology. I mean, we bring in a group of technologists that I think will drive our technology platform even further than what we've been able to do. They have online banking. We can roll out to 3 million clients now at a level that we haven't been able to do. They have $60 billion of deposits, $40 billion on balance sheet. We're able to do things with that with our funding. They have tremendous number of clients who leave their organization over time as they want a financial advisor. Now we can be that financial advisor. We can put research on their platform, alternatives on their platform. The beauty about this deal is there's so many positives, and there's going to be no dislocation to clients. It's just adding to what they've already got.
You mentioned on the analyst call that E-Trade tend to serve a younger and more mass market clients. So is this planning for the future, therefore, for Morgan Stanley, or those guys are already immediately profitable?
Well, they've got a mix. I mean, like we do. We also have a lot of young clients. We have a lot of clients who don't have a lot of money. But most of our business is in the $1 to $10 million plus households. We have $1 trillion with people who have $10 million. Their demographic is different. It's certainly an option play on that. It gives us access to a different demographic. They also have a heavy trading demographic, which we respect and will support, and nothing will change for those folks. So, and then finally, this can be a platform to take internationally. I've been very interested in having a digital platform outside the US rather than trying to rebuild massive financial advisor networks. We have a boutique sort of private wealth business in Asia and Latin America. This would be very supportive over the coming years.
There was a joke on the call. You mentioned you're buying lots of technologists. There was a joke on the call that Mike, the E-Trade CEO, is more of a jeans and T-shirt type man. Are you going to adapt to his dress code, or is he going to have to suit up?
Do I look like I'm wearing jeans right now? No, listen, believe it or not, I do wear jeans. And no, Mike's a great guy. And, they've got a more casual culture, but you go down to our trading floors, or go to a lot of our offices, it's no different. It's the old schmucks like me on the 40th floor here who have to get with the program.
Well, and the younger schmucks like me. So anyway, there we go. What about the internal response more seriously? Because you did lay off some people late last year. Some people suggested for what was a record year of earnings that comp wasn't as high as it could have been. And Morgan Stanley is always seen as, elite, top rung investment bank, and you're buying something that's a bit more mass market. Are people disappointed with the brand dilution?
Oh, I doubt very much. I mean, I haven't had time for feedback. I just did a call with our managing directors on very short notice. We had 750 managing directors, about half our managing director group dialed into it globally, which is pretty incredible given some of them are asleep right now. No, I think, listen, we've got everything from electronic trading and equities to the prime brokerage business to M&A to financial advisors in every town in America. We have a digital platform already. This is not culturally far from where we are. This is not. I don't think of this as a mass market company. I think this is a very savvy, tech-driven digital company, and that's what excites me about it. The commonality is we're all in the markets business. Right? When Mike is joining our operating committee, when he's sitting at the table and we're talking about prime brokerage, Mike understands prime brokerage. So this is not going to be a heavy lift from that perspective.
What about some of those high-paid financial advisors, brokers you have, whose job is basically to give advice, high-paid advice to clients to try and then encourage them to trade? Does this acquisition make them somewhat redundant?
Oh God, no. No, there's always been direct access, right? Oh, and many clients have direct accounts away from us. They have them with other institutions. We'd rather they now have them with E-Trade. No, the advisory platform remains incredibly robust. It exists for a reason. You have complex financial needs. You need a partner to help you with those needs. This will be additive to those financial advisors because we'll now be giving them online banking to provide to their clients. We're giving them online trading for the children or friends or family if they want to open another account, and we'll be giving them referrals out of the system. So it's clearly positive for financial advisors.
I want to switch focus a little bit and just ask about the coronavirus. What is your latest advice for your employees in China and the region? Are they back to work yet or not?
No, a lot of people still working remotely in the region. And, I think that's smart. It looks like I saw the numbers this morning from Wuhan were the lowest, but they've changed the reporting methodology. It appears to have peaked. That's no solace for those who are affected by it or might be affected by it. So we're still, like I think all major corporations, very cautious about folks. We cancel. We have a new managing director conference, which we've cancelled. We're moving later to the year. We don't want to put any more pressure on folks who are dealing with their families.
Do you think that the Chinese GDP impact is being understated at the moment, potentially?
I think they'll provide stimulus. They'll bounce back out of this. They did out of SARS. Obviously, it was a very different time. The Chinese economy is much bigger now. It's also much more coordinated. No, there'll be a hit to GDP in the short run, but they'll bounce back. If they find get the serums right and get on control of this, this will pass through.
A quick question to the environment back here. Another Democratic debate last night. Bernie Sanders very much in the lead, in the front runner. Lloyd Blankfein recently tweeted that he would, quote, ruin our economy if he became president. Do you agree with that?
Well, unfortunately, I don't have a Twitter account, so I can't enter that debate, regrettably. I'll have to leave that to Lloyd and Bernie to sort it out.
I mean, clearly he's retired, so it allows him to speak more freely. But what's your take? Would a more admittedly socialist candidate hurt the U.S. economy?
Wilfred, I don't know that I want to get into the politics. This is a great country. We have separation, three legs of government. We have the two houses any president's got to deal with. Things don't happen as quickly as some people in their campaign suggest they might. Let's see how the election plays out.